Our final panel today shifts the attention a bit from policy changes to the capacity of tax administrations to enforce them. And it's titled The Role of Tax Enforcement in a Competitive World. Moderating this discussion is Séverine Picard, who is the founder and chief executive director of Progressive Policies. So, Séverine, the floor is yours to introduce the discussion and the speakers.
Thank you very much. Thank you very much. So, yes, so the objective of this panel is to look at enforcement policies, and we have a very diverse panel, experts from a different background. We have Reinhard Biebel, who's the head of unit at Digitaxed. So, Reinhard, if you would like to take a seat. So, Reinhard, you've been introduced to me by the organizers as the brain behind the DAX. So, welcome.
Thank you very much.
We also have the perspective from a researcher. We have Pierre Bachas, who's a senior researcher at the EU Tax Observatory. So, Pierre, here he is. Welcome. So, Pierre, you are an economist with obviously a specialty in taxation and a keen interest. I thought that was quite interesting in financial inclusion. So, welcome, Pierre. And last but not least, we have a representative from the business world, so Michael Schick. So I don't know if I say Michael or Michael, not sure, as I like. I think I'm going to go the French way. So Michael Schick, you're the General Secretary of ETAF, the European Tax Advisors Federation, an organization representing regulated tax professionals. And just perhaps to introduce myself, I'm Séverine, I come from the labor movement, and among other, I coordinate a global network of unions for tax justice. This is a network which gathers trade union representatives from all the world. We currently have 80 trade unionists in that grouping, and we reinforce our capacity, our understanding, and we campaign for tax reforms that bring benefits to workers globally and at national level. So, as I said, a very diverse representation in this panel. So let's start the discussion with some figures. I thought I would dig out some figures as probably the only non-economist of the band here. According to the latest report, the Global Tax Evasion Report from the Tax Observatory, the amount of untaxed offshore wealth amounts to 2.4% of global world GDP, which is quite a lot, but also represent a significant drop compared to the figures in 2016, where the amount of money lost to offshore wealth was around 8%. So a significant trend downwards, which the Tax Observatory attributes to the start of the automatic exchange of bank information. Another figures, which is a lot less optimistic, is the amount lost to corporate tax abuse globally. So according to the same report, a large amount of profits continue to be shifted to tax havens, and in 2022 it's $1 trillion that is lost to profit shifting, and I don't even know how many zeros there is to $1 trillion, but quite a few. The EU stands to lose the most because we have 20% of our corporate, or the equivalent of 20% of corporate tax revenues lost to tax haven, and the main profit destinations are Netherlands, Ireland, and third is Switzerland. The last figure I want to give you is more from a human perspective, and that is the number of tax inspectors globally and in Europe. This is a concern that is very high among my comrades in the European public sector. They have issued a report showing that in the space of 10 years, between 2008 and 2018, we have a reduction of staff in the tax inspectors of 14%. So that's the equivalent of 1 in 7 jobs lost in this fundamental public service. So these are the few figures I wanted to give you as an introduction, and I propose that we start the discussion straight away by a first round of questions trying to set the context for the discussion on enforcement. And I will start with the EU Commission. Reinhard, if you could tell us a bit about the upcoming initiatives from the European Commission on enforcement. And also, I would like you to tell us a bit if there is anything that member states should do better, because I'm very aware that when it comes to enforcement, a lot should be left to the national level as well. So tell us, what's coming up?
Thank you very much, Séverine. Welcome everyone this afternoon. The high participation shows that these are extremely relevant topics still. Also, thanks for kicking off this round with impressive figures and numbers. Let me just react that the fight against tax avoidance and evasion has been very high on the agenda of the Commission and the Member States for many years. So it's not that nothing has been done in this field, but it's interesting to see that the numbers are still relatively high. So I said a lot has been done, and I think everybody agrees with that. If you look back 10 years or so, I think we have managed at the European level all together, Commission proposing, Member States negotiating, Parliament supporting, a high number of new directives, new legislation. I would almost say a whole wave of new legislation in the area of direct taxation. Now, I'm, as you mentioned at the beginning, very much involved in the work related to DAC, and there were many DACs adopted over the past years, but not only. There were also a number of other more substantial tax directives, including the ATAT 1 and 2, as well as the Pillar 2 directive. So a lot has been done in this field. Nobody can deny that. It went so far that some stakeholders, I'm far from saying all, but some said, this is probably enough for a time, give us a break, because we need to make sure that all these new requirements are properly implemented. And our resources are very much stressed. This we heard from some member states, from taxpayers, from private sector, basically from all stakeholders. And there is some truth in it. Yeah? It's not, you cannot ignore that the amount of work to get all this new legislation, let's say, implemented, properly applied, and also enforced, takes a lot of resources. Now, if you read the mission letter of Commissioner Hoekstra, who was just here, there is still a point on continuing the fight against tax avoidance and evasion. So that means the Commission is not stopping. We are not kind of pulling a brake on that, but we also realize that proper implementation and enforcement are crucial. And therefore, we put that element a little bit higher on our agenda for the current Commission, and we think it's also only fair and efficient to make sure that what has been adopted and implemented in terms of legislation is also applied and enforced in a proper way, and ultimately that also leads to a higher compliance and ultimately a better competitiveness, which is also one of the key objectives in the internal market and very important for all stakeholders. But that brings us more closely to the topic of that panel, the role of tax enforcement in a competitive world. And I would like to focus on three aspects here. So first, what is the role of the EU as an institution, maybe the Commission more closely, but also the Parliament, of course. Second, what is the role in this tax enforcement for the tax administrations and the tax payers, including the tax advisors? We also have Michael here in the panel, and he's representing that very important and relevant profession. And thirdly, I would like to say a few words on the role of the legislation itself, which also plays an important element there. So I think nobody would disagree if I say that the rights and obligations that are enshrined in treaties and secondary law are only as strong as they are implemented and enforced on the ground in the member states. So it doesn't make any sense to have laws that are not applied and enforced properly. I think that's very clear. And in that context, the Commission, not long ago, in February this year actually, adopted a commission on the simpler and faster Europe that stressed that element very clearly and said it's crucial and critical that existing EU law is properly implemented and enforced. and is ultimately an enabler for competitiveness. So we are clearly stressing that element, and that also basically fuels the work that we have been doing. That's our role as a commission, as a guardian of the treaty, and we will even more invest in that in terms of preventive measures, like working more closely with member states in the transposition phase. Transposition roadmaps, for example, are a tool, or a kind of implementation discussions to guide the member states much better in the implementation phase. That does not mean that the classical tools like EU pilots, where we concretely seek for more information if there are indications, and ultimately, of course, also opening infringement cases, would disappear. Of course, they remain a crucial element and a crucial tool for us in that work. But ultimately, it's then also for the citizens and the business to indicate that there are cases like that need to be looked at and need to be resolved and addressed. And we think that with that, Europe and the EU remains a very competitive area to do business and for citizens to benefit from their rights. So ultimately, on first point, the Commission will remain the guardian of the treaty and make sure that legislation that has been agreed and adopted is properly also transposed and enforced. Second point on the tax administrations and taxpayers' role in that context, and it was interesting to hear about the decreasing number of tax inspectors, because it's crucial that if you want to enforce law, and the law is not getting less complicated, it's getting more complicated, it's getting more voluminous, you probably need more resources in terms of numbers rather than less. Unless you benefit from some technical advancements, but we can touch upon that a bit later. But normally you would expect that the number goes up. So for us it's important that member states dedicate the sufficient number of resources in order to make sure that they can enforce the existing law. That's not only related to the numbers, but also in terms of training and capacity building, because new legislation tends to be relatively complicated. If you look at the Pillar 2 directive, in another field, somebody made a joke and said, "Have you read Pillar 2 and have you understood it?" I said, "Yes, I've understood it, but then you haven't read it," basically. So, the legislation itself is becoming more complicated, and that means people dealing with it, including the advisors, of course, those have to apply it, and those who have to enforce it need to develop in the same direction. Also, we need more cooperation between taxpayers and tax administrations. The Commission is very much supporting things like cooperative compliance. You have the OECD ICAP version. You have in Europe, we have something called ETAF. It's a kind of building trust based on information exchange and cooperation between the two. And what is also important from our point of view is exchange of best practices, working together, building networks between the national tax administrations. And there we have several tools and fora, like meeting the tax administrations, not the ministries that are usually in charge of negotiating, but the tax administrations that have to apply. We have fiscalis groups where we set up discussions on how to implement, for example, on Pillar 2, a very important fiscalis group where all member states participate. We also have Commission visits to the member states to check how they basically deal with the legislation on the ground. And last point, sorry, just to close, the legislation itself needs also to be enforceable. I said it becomes more and more complicated now. Okay, that's probably also criticism towards those that are in charge of drafting and probably negotiating it. But at the same time, if the business world is complicated, it's nearly impossible to come up with a very, very simple legislation. But it plays a role. Legislation needs to be clear, needs to be understandable and hence enforceable. We are looking at it in several evaluations to make sure that it is fit for purpose. If needed, we will come up with legislative changes, at least as a proposal, but also with more and more guidance, where we work with member states to provide guidance in order to ensure a consistent application, including Q&As that we develop together with member states in order to make sure there is consistency, and consistency will help in understanding the law and hopefully also understanding the concepts behind, and in the end ensure proper enforcement.
Thank you very much, Reinhard. And I'm not sure I agree with you when you say that the world is complicated. From my perspective, it does sometimes look very simple, but I'm sure that we can go into that in the discussion. But for now, I would like to turn to Pierre. We've heard that the Commission feels that there's a lot of work on the table of the member states to transpose and force supply properly. Can you tell us a bit about the practice, what has been the key evolution in enforcement practice recently, and where you see upcoming tax challenges? If I can ask you to do that in less than 5 minutes, then we can, go ahead. Thank you.
Thank you, Séverine. So tax enforcement compared to some of the other topics is maybe we can be a bit more optimistic. In some of high net worth individuals, multinational, we've been a bit pessimistic. I think in tax enforcement, there has been some good successes that we should celebrate. And the way I think of those is by going through the alphabet. So A is for automatic exchange of information. We've talked about this, and we can do better, but at least maybe about a half. Some estimations say 2/3 of previously offshore wealth is now revealed, right? That's, if you had said that 10 years ago, I think few people would have thought we would be at this stage now, right? And so some has been repatriated too, and that has already led to some increased revenue in EU member countries. We can discuss later the challenges, and there's still some ways to avoid this information requirement. B is another great development, which is beneficial.
Are you going to do the 26 letters?
Yeah, we're going to the Z. I didn't find, but the rest I have. Okay. But no, so we'll do A, B, C, D. Okay, so B is for the beneficial ownership reporting, and that's another great development, right? In a lot of countries now, we know who are the final owners of companies, who are the beneficial owners, and so that has allowed us, the EU Tax, for example, to do some studies we didn't think were possible, which is to link firm owners to their firms and to the retained profits they have in these firms, right? And get much better measures of the true income that is being controlled by especially the very wealthy individuals. So you have an idea of the numbers again. When you take this broader measure of fiscal income that includes the profits of firms, you often multiply by a factor of 5 the income that these people control when you compare to the reported taxable income. So that's a big game changer, right? If we only focus on taxable income, we're missing a lot. And we've had great studies, we've already mentioned them in the Netherlands, in France, and we're hoping to produce more to really participate in the debate on the progressivity of taxation, especially at the very top. Okay, and that's possible thanks to the bioregistry. C, I'm going to go very fast. You know what it is, corporate tax erosion. We've talked about it, maybe we'll come back to it. We're in this a bit waiting game where we might be able to make some big progress, but the numbers, and you mentioned them, Séverine, they still remain staggeringly high, right? And so for the EU, maybe about 100 billion in taxes that is not collected, about 18% of corporate tax revenue. And actually, if you look at the time trend, which we've produced now in this Atlas data we have, you don't really see a downward trend in the past 7-8 years, despite all the BEPS actions and a lot of other actions being taken, right? So that's still something that should be that should be a big concern, and we need to address. And so D, the last one, digital, right? So digital has 2 faces to it, right? The first one is digitization, actually, and that's something a bit more mundane because it's about everyday taxes like the VAT, like maybe pre-filing tax return, which would be something that brings a lot of simplification for most taxpayers. For we're talking about tax inspectors, so what I'm hoping is that maybe there's less of them, they have better tools, including automatic risk scores, and so that's something that's been quite important, especially for countries, for example, in the south of Europe, in Eastern Europe, that have actually managed to close their tax gaps in part and converged to the level of effective taxation of richer countries in the EU, right? And so again, that should be a success. There's still things we can do, and I think digitization and digital payments is promising. Now, the other part of D is, of course, the digital sector. We've talked a little bit about it. The commissioner just mentioned that, well, we might do something about some of these packages and so on, but that's, again, with Pillar 1, that will not be implemented. If we're realistic, that's, again, a big topic we will need to cover. So I'll stop here.
Thank you. Thank you very much, Pierre, for starting with an optimistic note. It's true that we're not used to this anymore, so thanks a lot, and being short and to the point. Now, Michael, turning to you, please bring us the business perspective on enforcement. Are you happy with it?
Thank you very much, Séverine. Well, first of all, no, we're not happy with everything, and that's clear. First of all, if we look at the business sector in general, the whole business sector, there's a fact which, in our opinion, we should not forget. The vast majority of companies wants to be compliant and is willing to pay their fair share of taxes. But they would do even more gladly if that could be done easily and more efficiently. And that simply requires clear tax laws. So you have a tax law which clearly states you have a life circumstance, and for this life circumstance you pay a certain amount of taxes. Then you have another circumstance, and for that circumstance you pay a certain amount of taxes. But that is not always the case. Tax laws are very unsystematic, hard to understand and difficult to administer. And then, of course, as Reinhard said, we had a lot of efforts to prevent possible tax fraud, tax evasion, very important, but they complicate, of course, the tax law even more. And in our opinion, this development should not go on like this. Businesses who want to be compliant should really be enabled to do without further, without undue obstacles, without unproportionate obstacles. Because if documentation becomes sort of an end in itself, then we're not on the right way in our perspective. So the administrative and documentation burden is significant. There are studies, in this case it's a German one, show that for an average SMEs, all the administration and documentation work costs 32 working hours per month. So meaning one employee nearly 1 week per month only doing administrative stuff, and that is a loss of 61 billion euros per year for the whole country, we think could be better spent in investment. So if the compliance costs are higher than the benefits of a rule, then something has to be done. In our opinion, complexity has a limit, and we should really look that we don't pass that limit. Probably we have passed it already. So what we say, now for the future, any new rules have always to be thoroughly examined to make sure that the administrative requirements are proportionate and reasonable. So message of the business sector would be, make it easy to comply.
Okay. I can relate to that. Make it easy to comply, and let's go into that. What do we mean effectively? But let's make it easy to comply with. And I want to start with Pierre. You started this conversation already, but if you could go a bit deeper. If we talk about, I've heard omnibus, decluttering. I'm not even sure these are words in the English dictionary, but I've heard about this since this morning. Now I want to ask you, Pierre, which enforcement policies work well and should not be in an omnibus or decluttering exercise? Yeah. What do we keep?
No, that's a good question. So I think we all agree that well-done tax enforcement is needed for many reasons, right? It levels the playing field, it's horizontally equitable, it frees resources for elsewhere, right? And so one of the issues, I think, because we didn't have well-designed policies on some aspects, including international taxation, we've added all these patches, basically. We discussed CFC earlier, there's this advanced transfer pricing agreement, and all those become indeed very costly, right? So one of the issues we need to recognize is that initially, sometimes because we don't have initially the right policy, that we need to add all of these things. Now, I want to though go, and maybe start a bit of a debate with Michael, which is, you hear arguments, for example, in the US, they decided, to get rid of the beneficial ownership reporting with the logic that it was way too costly for small firms. So, first there's an easy solution, exempt small firms, right? And so I think we agree again for SMEs, many rules should not apply, right? And often they don't. But, even in this case, it was very hard to understand because, well, if you're a small firm, typically you know who your owner is. Well, you should, right? It's a bit strange to, to not know that. And if you're a bigger firm, really it's best business practice to actually know who owns you. And I think, you have that information. So thinking about compliance costs, is that a real compliance cost or is that, a desire to stay non-transparent? I think the same apply, and, I'll give you maybe to answer in a second, which is for the country-by-country report, and my colleagues have tried a lot to try to make those more transparent. So far, we don't have a lot of data, and the data remains, very aggregated. This seems to me that goes again against best business practice, right? A well-run business should know where it has its employees, in which countries, where it has its profits, where its assets are located. As a shareholder, I wish I knew that, if I was a shareholder of any business. And so again, these arguments that this adds a lot of compliance cost, they don't seem to me for those big businesses, we're talking $1 billion at least in revenue, that they're, that they're very fair arguments. So, again, all in for maybe the SMEs not paying some of those, but these arguments that come back very often that it's too costly to comply, frankly, with what is best business practice if you have your books in order, is a bit hard to understand.
Thank you, very clear. And since Michael wanted to react, please go ahead. If you could reply to Pierre, but also tell us, what do you see as particularly burdensome?
Yeah, the argument about the beneficial ownership, the solution is probably in the middle somewhere. It's true that as a small company, you should know who's the beneficial owner. And for the big one, yes, they can bear the compliance, because I fully agree.
And which areas do you think should be simplified? Can you be a bit specific on that?
Yes, of course. Well, the most urgent need we see in the DAX 6.
DAX 6, yeah.
Yes, of course.
Can you elaborate for the ignorant, like your moderator, who doesn't know much?
Well, DAX 6, as is known, DAX 6 has unclear definitions. The scope is too broad, and that has led to, well, the critics is broadly known, but that has led to excessive reporting and limited practical enforcement. A lot of repetitive reports, that's overwhelming the tax administrations and is not having significant enforcement action. And even there was a study of the European Parliament. They have confirmed these shortcomings of high costs, legal uncertainties, and overlaps with newer tax regulations. So what we recommend, but we go very far, is a complete removal of the
complete deletion of DAX 6.
Of the complete removal of the reporting obligations in DAX 6, which does not necessarily harm the objective of the directive, because it's about administrative exchange and administrative cooperation, since we talk about enforcement, but which would not prescribe any more so detailed how to do it.
Okay. I'm going to go to the who has been presented to me as the brain behind the DAC to ask what he thinks of that. But before we go there, I would like to redirect a little bit the conversation on a source of complexity. I'm going to have to explain, because I often have to explain why trade unions are interested in DAX. That's not usually something that people understand at the first sight. So let me give you a very clear example, and I'm sorry some of you have heard it many times. Where you have your employer which engaged into corporate tax avoidance. What the employer does is that he artificially removes some of the profits away from the country where the workforce is situated, and then stash those profits in tax haven or other low tax jurisdictions. What this means is that for the workers who are producing the value, it means that there is no money left in their establishment. So you are in a company which normally should be profitable, fairly healthy, but where your employer engaged in aggressive tax avoidance, you are put quite close to artificial financial deficit. There's no cash left for collective negotiations, and in those companies we cannot negotiate anything. We can't negotiate higher wages, better terms and conditions, and those are companies where social dialogue is extremely difficult. So there is a strong interest for us to have employers. What we say, or what I say, is that a bad taxpayer is also a bad employer. And that's what I tried to say this morning. This is not a conversation that should be taking place only between policymakers and business representatives. There are strong stakeholders outside, and we're trying to pray or to force our way into the debate. We have identified one source of huge complexity, and that's the transfer pricing rules themselves. We find it, in France, I'm French, we are very lucky. We have a number of prerogatives, and we have experts that work for us. And those experts do an analysis of transfer pricing rules of the company. So we apply an external eye to the analysis made by our companies. You have no idea how complex that is. And if we don't have unions that are capable of paying those experts, then we do not understand the extent to which our companies are shifting their profits offshore. This has a super direct impact. In France, for instance, we have a system that is called financial participation, right? So the financial participation is every year you have a percentage that's linked to the profits made by your company. So if your company declared low or non-existent profits, you lose quite a significant part of your wages as well. The figures to calculate this financial participation is the exact same figure that the company gives to the French tax administration. We cannot, in most of the cases, reread those transfer pricing rules. In the most egregious cases of abuse, where we can understand and we see there's been some profit shifting, what we are told by our businesses, this is legal. We are within the realm of transfer pricing rules. So to us, that is a source of major complexity, is the very design of international tax rules in the first place. For this reason, we are quite tempted to support a unitary taxation system where you will get rid of this idea that different entities in the multinationals are autonomous and independent, and we want to go into something for more objective factors, recognizing that multinationals are coherent global entities. This, for us, would represent a significant source of simplification of the rules themselves, and therefore of enforcement and compliance. So that's why I was hinting earlier on when I said I'm not so sure that the business world is so complex. I actually think it can be simpler if the rules were simpler. So I would like to ask you my understanding, but I don't want to speak on behalf of the business world, I mean, God forbid. But is it something that your clients or your members would see favorably, that to switch away from transfer pricing towards unitary taxation, formulary apportionment, could that be a source of simplification, including for DAX 6, for instance? Because it would by nature reduce the source of manipulation.
That could be a possible way, but for the moment I have not gone in depth into that, so I would be happy to exchange more later on, to be honest. And I have not consulted with we have not consulted yet with our members.
Okay. Well, I think it would be a conversation interesting to have.
Yes, would be an interesting conversation.
All right. Okay. I'm turning to you now, the Commission. Please react to what you've heard in this round.
Thank you. I don't want to disagree with you in your ultimate conclusions that things can be made simpler. And if I start on transfer pricing, my unit is also in charge of that. We are working on it. And not long time ago, the Commission came forward with two proposals. One on BFIT,
yes,
and one on a transfer pricing directive. The objective of BFIT is basically to introduce a common tax base and then introduce, that was here in a second step, that would follow in a couple of years, introduce a formula to allocate the profits within groups, international groups, that would in the long term most likely replace the transfer pricing system. Now, we have not managed yet to get agreement on that. And it's not the first time that the Commission is proposing that. You can follow decades back that this topic has been under discussion, because we also see a number of, let's say, a big room for professional judgment and interpretation in the whole transfer pricing system. And that is reflected also by by the high number of tax disputes that we have in the European Union, where member states have discussions about what the real profit is that should be allocated between member states. There are more than 2,000 basically at European level, and if you understand the details, you would know how much resources are taken up by that. So we, as a Commission, we proposed a directive that would try to harmonize certain aspects at the European level. First, we are implementing acts on the basis of a directive in order to increase legal certainty, in order to make it easier for business to comply with. That should all be in the context and in the framework of the OECD system. We are not proposing to go beyond or break the system or amend the international system. It is just to say, if there are options, if there is choice in these guidelines, then member states should make an effort on selected topics to try to agree on a certain way of interpreting it. Now, member states did not agree with the directive as an instrument to achieve this objective, so this discussion is currently on hold. There was another attempt to at least establish a forum that would discuss transfer pricing issues, but also there we as a Commission said we need at least a kind of political commitment. We cannot have a legal requirement, but at least a political commitment from the member states to say, if we agree, then we also apply it. And even that was not possible for the time being. So you see that this is an area where in practice, and that's what I agree, where I agree with you, there's a lot of room for interpretation and judgment, and that is used. That is used in a different way by different states within the EU, but also outside the EU. So in the short term, I'm afraid we are not easily getting rid of this room for judgment within the transfer pricing area. Therefore, we need issues like DAC 6. And there, of course, I disagree with Michael and his request to...
Can you specify what DAC 6, the main objective?
Yeah, I will
of
be
DAC
very
6?
brief. First, I have to clearly state that I disagree with Michael that we should repeal the whole directive, DAC 6. DAC 6, the title of DAC 6 is... basically the reporting of potentially aggressive tax planning schemes. And the important thing is potentially aggressive. Let me also add one element that is important in that context. We don't need to talk about tax evasion because that's illegal, that's breaking the law, that's breaking the rules. But when we start discussing about tax avoidance or also aggressive tax planning, then we are entering kind of gray zones where sometimes it's not so clear whether things are legal or not legal. And that's a result of the non-synchronized and harmonized national tax laws within the European Union. So what we actually would need is a clear definition of aggressive tax planning or tax avoidance. And we don't have that, to be honest. In that sense, there's always a bit of an argument and a kind of exchange of views on whether certain structures and transactions are tax avoidance or not. And it's, in this sense, DAC 6, which includes a certain number of trigger indicators, or we call it hallmarks, leads to a reporting requirement if such a hallmark is met. And then the receiving tax administration gets the information. Look, there is a hallmark met. Now I have to look at it and see whether it's really aggressive or basically a not intended consequence of my law. And that's the whole purpose of DAC 6, to give the tax administration at a very early stage a tool, an information that would help them to avoid the practical implementation of aggressive tax planning schemes. Now, the hallmarks were deliberately designed in a vague, in a rather vague way, because it should also catch potentially aggressive, because we don't know how the definition in certain member states is in practice. So there may be more reports than basically aggressive tax planning schemes identified. That's logical. But it's also creating some complexity, and that's where we agree with business and advisors and maybe also some member states, because there could be several intermediaries and advisors involved in a certain scheme, and that may lead to double or multiple reporting of the same scheme. That may be one reason for the high reports. Also, there is a kind of fear that in case of doubt, I would rather report than not report, because I want to be a good taxpayer. That is what Michael said before. Actually, nearly everybody wants to comply. So that may also be a trigger. And we are looking at that in the context of the Commission simplification exercise, which is also then part of the tax exercise on simplification. Of course, we look at the whole DAC, including DAC 6, and see whether we can clarify, we can reduce over-reporting, we can eliminate overlaps in terms of reporting, etc. So that's the whole objective in the DAC area when it comes to simplification.
Okay, I hear you. So like a simplification in the sense of cleaning the text, clever simplification. If I may put things like
clever simplification, smart simplification, and I must say the first experience is if you embark on a simplification project, it's not really simple. I think that's clear, but we are not starting with intention to basically revoke whole parts and bits of legislations.
Okay.
That's not the ultimate objective. To give you an example, in the case of DAC 6, we will go through each and every hallmark and see how many reports it has triggered, how many schemes have been identified, and maybe the conclusion will be that a couple of hallmarks are not fit for purpose, are not meeting the ultimate objective.
Okay.
But we need to do a proper analysis. We need to go through that very carefully before we make our proposal. And just to conclude on that, I say it's not simple, because the Commission may have a certain view on simplification, may come up with a proposal, but then we go into Council with 27 member states. We also have to listen to business, and what we already heard is that the views may not be so clear and streamlined. So what we think may be a simplification may not be seen as that by certain member states, for example.
Yes.
And business also says, don't try to make cosmetic changes, don't fiddle with the rules. We have now established them, and any small changes will just increase the burden and the cost rather than reduce them.
Okay, so just one last one of question before I open the floor, and I invite you to think if you have any question. I think I said it, but I'm going to say it with different words again, just because unionists like to repeat themselves. I think a key problem at the source of the complexity is the fact that, in a transfer pricing world, you basically give businesses the primacy in deciding where to pay taxes. They decide where to book their profits and therefore where the taxes are going to apply. And then it is the role of tax enforcers to come after that and apply the rereading, make sure that is correct. So it's kind of, running the cat running after the mouse. And the mouse, there are many mice, and the mouse is running very fast. And I think to switch towards a system where you have a more objective approach, I'm just going to more objective approach of declaring profits might help, and I just wanted to go on this a bit deeper, and that's the issue of transparency. We've touched upon, Pierre, you've touched upon transparency between tax administration. I'm talking now about transparency to the public, to my constituents, to trade unions, to investigative journalists, just to anyone interested to know where the taxes are being paid, if at all. We've had the European Directive on Public Country-by-Country Reporting that came into force very recently. The first reports are starting to come out. We've had some difficulties with beneficial ownership in the European Union and public access to it. And I want to ask you, to ask all of you, but perhaps starting with Reinhard, before I move to the other speakers, what, in your view, is the impact of public access on compliance? Does from what you see happening now, does transparency, is that a good disinfectant? We often say that the sunlight is a good disinfectant. Does it help enforcement to be transparent?
I mean, I try to be brief. I mean, there are two types of transparency, as you rightly mentioned in your introduction, transparency vis-à-vis the tax administration, and that is extremely important to provide the tax administration with the information they need in order to do a proper job. And that is what DAC basically is providing to a large extent, and other tools as well. OECD has also developed international standards that are in line with DAC to a large extent. So that's an important element. And then on top you have the public transparency. And there I think we need to be a bit more careful in the way we use that tool. Now we have public CBCR, and that has been in place for many years already for the financial sector, yes, for the extractive industry, and is now kicked in for the rest of the business, more or less. Now you could say, on the one hand, there was no existential crisis for the financial sector because of public country-by-country reporting. Also, the extractive industry is still alive, and if they have problems, it's not necessarily because of the public reporting. At the same time, there are, in general, of course, fears and concerns that if the information is not used in a proper way, then this may lead to misunderstandings, misinterpretations, and companies have to defend themselves for things that are not well understood, not well put in the context, etc. You could counter that argument by saying it's in the interest of the business to explain their tax policies much better, and they should do that actually without any legal requirement. And many of them do that. I mean, many of them report about their tax policies on a voluntary basis already. So I think tax transparency vis-à-vis the tax administrations is absolutely crucial. We need that. Tax transparency to the public is also important, but it needs to be used with a certain care. It's also then we have to take into account a question of level playing field, because it's not always an advantage to be extremely transparent if it's about business data, business information, if you have competitors in the same sector who are located outside the European Union and are not subject to such a transparency requirement, that can have also competitive disadvantages. And right, we need to factor that also in.
But you see, that's why it's so important in your dialogue that you speak to businesses, but also to other stakeholders. For us, for trade unions, we need this data, or we don't get paid what we're supposed to be paid. So I think, we have quite a strong case. Pierre, on the issue of tax transparency, can we have your view, and do we need more?
Yes, I think on this we agree. It's something like the CBCR, again, I think this is good business practice to have this data. Now you can, you talked about issues with competition with other firms. Well, you could imagine there's a little lag, maybe of a year in publication. I think that would still do for you, Séverine, if the data was a year old, for example, and you were based on that. It's hard to see how that would be major cost to just say my employment is there, my profits are there. We're not talking about new investment projects or, where are you going to drill next or things like that, right? So again, I feel these arguments are easy to overstretch, right? And so, with some simple solutions, like a little bit of a lag, maybe initial access only for research community or some specific, stakeholders, like the unions potentially, that would be a way. And then after 2 or 3 years, you could have this data. And I want to highlight, that for all these major data reporting advances that have been the CBCR, the CRS, the beneficial ownership registries. So currently, we still have very limited, quite aggregate information, right? Except for some exceptions you mentioned, financial or extractives. And so we're very far even from just having the right aggregate numbers, in a kind of live manner. And so we have a long way to go. Then where exactly will be this limit? Should this information be live, accessible to everyone? Maybe that's where the debate should be. But we're really far from even starting to go to an acceptable level of transparency, I would say.
Okay. Michael, I'm eager to hear your
Yeah,
reaction.
very shortly. Maybe concerning the public CBCR. Well, of course, transparency in general can be a motor because then companies will be more aware of their tax structures. Of course, if it is public. But I fully underline what Reinhard said. The question is, what is actually done with all these data? So where are they going? They can lead to misinterpretation, can be misunderstood. And there's one thing about the public CBCR also. The raw data from the public CBCR can be very technical. So can be not, and it's then for the public. So there are some dangers, yeah. There are some danger. I would like to lose one last word on the DAX 6. Of course, our demand was a political demand. There will be a way in the middle. There is different possibilities. I'm curious where we go. There is a possibility of limiting the scope, improving the definitions. But then, from our point of view here, digital tools could really help. For example, detecting repetitive reports, or that could be a good AI or digital solutions. That I want just to launch this here. Thanks.
Thank you. We have 5 minutes before the end of the panel, so I would like to encourage people in the room to stand up, make comments or a question.
Arnold Merkies, Tax Justice Netherlands. About the simplification, just some experience which we had in the Netherlands over the past decades. We had very often simplification agendas of the Ministry of Finance for taxes, and they always ended somewhere where suddenly it wasn't mentioned anymore. They kept track of it like 1 or 2 years, and then they forgot about it, and then like 5 years later, then there was a new, very ambitious simplification agenda. So it seems to be very hard. And one of the things they always did was say, okay, then let's ask business. They ask people like stakeholders, and then they also came to us, to Tax Justice, of course there are many business people they go to, and not as many people on the Tax Justice side, but at least it was nice that they came to us. And then the people, we had these conferences as well, and then from the business side they said, well, what would be really reduce complexity if we abolish this tax, like for example the dividend tax or the inheritance tax. Now it's something like, okay, well, what would be really easy if we abolish all taxes? Huh? Then that's really the most simple. But the thing I'm saying is that going to business, you also have to be really careful. Of course, that's what they're going to say. I mean, it's not their first interest to reduce complexity, but there are other interests, like, we don't want to give this certain data, because if you give this certain data, well, it might be more transparent, and you also see more, tax avoidance maybe. So if you reduce complexity, I want to say be very aware of, especially when you're asking people, like, is it really reducing complexity? Because you still want to fight tax avoidance.
Thank you. So is it reducing complexity or is it reducing taxes? Anybody else wish to intervene, please? Yes, please. If there is a woman in the room who wish to take the floor, please.
Hi. Simon Said from Bloomberg News. I had a question. You mentioned at the beginning that the Commission isn't stopping when it comes to initiatives on tax avoidance, and it was rightly mentioned that it was also in the mission letter for Commissioner Hoekstra. But in terms of new legislation or proposals that are coming from the Commission, when it comes to tackling tax avoidance specifically, there isn't much. And many do argue that the simplification route is actually kind of the opposite of that. So, I mean, if you could just talk about any new initiatives that you're considering, or what, in terms of new proposals, are coming from the Commission when it comes to tax avoidance specifically, that would be good.
Okay, thank you. One more? At the very end over there.
Two short questions to the Commission and, of course, to the rest of the panel. My question goes, I want to echo what has just been asked by my colleague, and especially how far are third countries involved in the fight against tax avoidance. I mean, I'm talking about European third countries. And the second question is, how does the Commission deal with the case law of the ECJ? I mean, I'm just curious about that, because we've seen the ECJ, especially on tax rulings, for instance, and other issues, and I want to know how the Commission deals with that. Thank you very much.
Thank you. So I'm going to do something very cruel. I'm going to give you 30 seconds each for your final words, plus responses to the questions.
Very briefly, DAC is building a lot on what is done at the OECD level. So if you follow the news, you would see that the OECD is currently working on an information exchange concerning real estates. And it's not a kind of high-risk speculation that the Commission will also look at that as another area for information exchange. That's also almost the answer to your question regarding the role of third countries. Of course, they are involved in the OECD in terms of information exchange, which is also global by now. So financial accounts are exchanged globally, and non-EU countries are to a large extent part of that as well.
Very good, thank you. Pierre, you've done some work on developing countries and tax enforcement.
Yes, I was going to go somewhere else. You only give me 30 seconds,
ahead.
Which is, there's something we didn't talk about, which is complexity by design, and which is often, by adding complexity to the system, then it's a way to unravel often a lot of things, and we didn't discuss that. I wanted to bring that up because I think often, laws are complicated because maybe they've been built in a complicated way, so that later on it's very hard, and you have arguments like that. For example, well, we cannot share the CBCR, it's too hard for anyone to understand, right? Now, I still wanted to bring some reassurance. I think some of our work, for example, the EU Tax Observatory, is precisely to translate these things into simple figures, simple numbers, and so I don't think these need to be complicated.
Thank you.
Pass on to Michael.
So on the developing countries,
I just want to stress, it's not every day that I give businesses the last word. Just happen.
Businesses now will not say something on developing countries, but on simplification maybe. Yeah, it's because they have developed. It's like a building was developed, and they have developed because it's also due to tax justice. You wanted to solve every life circumstances in a different way, and we should be able to achieve more simplification simply, and that requires a lot of work and a lot of readiness also from all the players.
Okay.
Thank you very much.
And we have finished. I'm just going to finish with this little story. A guy at the OECD told me several years ago that the day that the public country-by-country information came out for financial institutions, a very large bank, 2 letters, you have a guess which bank it is, hired somebody with an office and a phone ready to prepare to pick up the phone and respond to inquiries from the public and from journalists. They hired somebody they had to let go that person. Nobody ever rang. Okay, so thank you so much. I'm sorry I finished with 1 minute late, but I think it's okay. So thank you very much for your time.